Get ready for what some analysts are calling the beginning of an altcoin ETF summer. July could be a game-changing month for crypto markets as the U.S. Securities and Exchange Commission edges closer to possibly approving a wave of altcoin ETFs, and investor anticipation is heating up. After the successful approval of multiple Bitcoin and Ethereum spot ETFs earlier this year, eyes have now turned to what's next, and according to industry insiders, that could be exchange-traded funds for leading altcoins like Solana, Cardano, and XRP. Several major asset managers, including names like BlackRock, Fidelity, and VanEck, have either hinted at or filed for altcoin-related ETF products. These would allow traditional investors to gain exposure to top altcoins through regulated financial markets, without needing to directly manage wallets or deal with crypto exchanges. The big question now is, will the SEC say yes? Analysts believe July is a critical window for these approvals. That's when a number of ETF filings hit their review deadlines, and recent political shifts in Washington could increase the odds of a more crypto-friendly regulatory stance. In particular, SEC Chair Gary Gensler has come under renewed pressure from lawmakers and the financial industry to provide clearer guidance around altcoins. With Ethereum now effectively treated as a commodity under recent ETF decisions, there's growing belief that other large-cap altcoins could be next in line for similar recognition. If the SEC does greenlight even a handful of these altcoin ETFs, it could unleash a surge of institutional capital into coins that have, until now, remained on the fringes of mainstream finance. A move like this wouldn't just boost prices. It would signal a major shift in how traditional markets view crypto as a whole. It would also provide more legitimacy to blockchain projects that have long aimed to challenge Ethereum's dominance, including Layer 1 competitors and smart contract platforms. However, not everyone is convinced it's going to happen so soon. Some experts warn that the SEC may continue to delay decisions, especially for altcoins with less regulatory clarity or ongoing legal issues. XRP, for example, still carries baggage from its lengthy court battle with the SEC, despite recent legal wins. Still, the market is already reacting. Altcoin prices have shown strength in recent weeks, with trading volumes climbing and ETF rumors fueling speculation across social media. If July delivers, we could be looking at the next big narrative in crypto, one that brings even deeper integration between traditional finance and digital assets. Whether the SEC gives the green light or not, one thing is clear. The conversation around altcoin ETFs is no longer just wishful thinking. It's now a question of when, not if. Stay tuned. We'll be tracking every move. Crypto markets are once again bracing for volatility as Bitcoin, Ethereum, and Ripple's XRP face a critical macroeconomic moment, the upcoming release of the U.S. Consumer Price Index, CPI report. Scheduled to drop this week, the CPI data is a key inflation indicator. And for crypto investors, it could be a major catalyst. Depending on the numbers, we could see either a breakout rally or a fresh wave of selling pressure across the board. Let's break it down. Starting with Bitcoin, the market leader is currently hovering just above the $104,000 mark. Despite holding key support levels, momentum appears weak, and analysts suggest that if inflation data surprises to the upside, we could see BTC test support around $100,000 or even dip into the high 90K zone. On the flip side, a soft CPI reading could spark renewed bullish sentiment, with a possible move toward $110,000 and beyond. Ethereum, meanwhile, has struggled to hold the $5,600 level, facing resistance from both profit-taking and broader market uncertainty. The $5,400 support zone remains crucial. If that breaks, analysts are eyeing $5,150 as the next downside target. But if Ethereum finds a catalyst in the CPI data, we could see a bounce back toward $5,700 or even $5,900 in the short term. Then there's XRP, which has seen increased volatility in recent days. Despite ongoing optimism surrounding Ripple's global expansion and its recent inclusion in Nasdaq's crypto index, price action has been choppy. XRP is currently trading near 0.66, and analysts warn that a drop below 0.64 could trigger a deeper pullback toward $0.60. However, bullish momentum could return quickly if macro conditions improve, with a move above 0.70 potentially setting the stage for another leg up. Across the board, the message is clear. Macro matters. As crypto continues to integrate into global markets, traditional economic data like CPI is playing a bigger role in short-term price action. For day traders and long-term investors alike, staying aware of these macro moments is more important than ever. It's not just about charts and candles anymore. It's about what's happening in Washington, Wall Street, and the global economy. As we head into this week's CPI release, expect increased volatility and fast-moving sentiment shifts. Whether you're holding BTC, ETH, XRP, or all three, be prepared, stay informed, and watch the numbers closely. We'll be tracking all the market moves right here, so stay tuned. After weeks of sliding prices and fading hype, P Network's native token is showing signs of life. According to recent data, the value of Pi crypto has started to rebound, and analysts are now closely watching several key levels to determine whether this is just a bounce or the beginning of a full recovery. Pi Network, which initially gained attention for letting users mine tokens from their phones without energy-intensive hardware, has always had a polarizing reputation. Some saw it as the next big crypto disruptor. Others were skeptical due to its long delay in launching a fully open mainnet and its complex tokenomics. Now, with a rebound in price and renewed social chatter, Pi appears to be entering a critical moment. So, what's behind the uptick? Analysts point to a combination of renewed community activity, speculative trading, and optimism around the long-awaited mainnet launch. Over the past week, the token has recovered key support levels and broken through resistance around the 35 mark, a psychological price level that many traders have been eyeing. If Pi can maintain momentum above that threshold, the next upside target appears to be in the 42-45 range. But if it fails to hold, a retracement toward the $28-30 zone is possible. That said, one of the biggest factors still looming over Pi's price is liquidity, or the lack of it. Because Pi isn't yet fully listed on major centralized exchanges, price discovery remains limited to smaller markets and unofficial trading platforms. Until Pi's open mainnet is fully deployed and major listings follow, volatility is likely to remain high. There's also growing pressure on the Pi core team to provide clearer timelines and transparency. Community members have been waiting patiently, in some cases for years, to see Pi transition from a mobile mining concept to a truly functional, tradable cryptocurrency. If the team delivers and follows through on technical promises, Pi could solidify its place in the broader crypto market. If not, we may be looking at just another temporary pump. In the meantime, traders are keeping close watch on both the price charts and the project's official updates. While Pi still has a long road ahead, the recent bounce is a reminder that in crypto, sentiment can shift quickly, especially when there's a large user base involved. We'll continue monitoring Pi's price action and development progress. For now, all eyes are on whether this rebound is sustainable or just another flicker in the cycle. Stay tuned. One of the most unexpected stars of the 2024 and 2025 altcoin cycles is back in the spotlight, and it's making noise. PEP. The meme coin inspired by the popular internet frog is seeing renewed momentum as whales pile in. And analysts are now watching closely for a potential breakout to new all-time highs. Originally launched as a joke and widely dismissed early on, Pepe has defied expectations, carving out a place among high-performing meme coins like Dogecoin and Shiba Inu. But this time, the moves aren't just coming from retail hype, they're being driven by serious capital. According to on-chain data, large holders, or whales, have been accumulating PP aggressively over the past 2 weeks. wallets holding millions of tokens are adding to their positions, often right before sharp price moves. This suggests institutional or high-net-worth traders are betting on a major rally. So what's behind the bullish outlook? First, momentum. PP has recovered significantly from its Q1 lows and is now up over 80% in the past month. Its chart shows a strong uptrend with increasing trading volume and social media engagement, both key ingredients in meme coin rallies. Second, speculation about listings. Rumors are swirling that more centralized exchanges could list Pepe, potentially unlocking new waves of liquidity. Every time a meme coin secures a major listing, it tends to explode in value, and some traders are positioning early in case that happens again. Third, sentiment across the meme coin market is heating up. With Bitcoin hovering above 100K and altcoins gaining traction, traders are once again turning to high-risk, high-reward plays, and Pepe fits the bill perfectly. Analysts are now eyeing key price levels. If Pepe can break above its previous resistance around 0.1018s, many believe it could set a new all-time high, especially with whale wallets providing buying pressure. Of course, it's not without risks. Meme coins remain some of the most volatile assets in crypto. Price movements can be sudden, irrational, and driven more by community excitement than fundamentals. And with whales involved, sharp corrections can happen just as fast as rallies. Still, for traders looking to ride the next wave, PP is once again showing signs of life, and this time, the big players are paying attention. Whether it becomes the next breakout or fizzles out remains to be seen, but one thing is clear: Pep's not done yet. We'll keep tracking its moves and bring you the latest as this meme coin saga continues. In a significant milestone for Ripple's XRP, the cryptocurrency has officially been added to the Nasdaq Crypto US Settlement Price Index, a move that further legitimizes its presence in traditional financial markets. The announcement came this week as Nasdaq confirmed XRP's inclusion alongside major cryptocurrencies like Bitcoin and Ethereum in its daily benchmark price index. This index is used to measure the fair market value of leading crypto assets and is referenced by institutional investors, financial platforms, and derivatives products around the world. The Nasdaq Crypto Index, NCI, is designed to provide transparent, regulated price discovery based on data from several trusted crypto exchanges. Adding XRP to this list not only enhances visibility but also signals that Nasdaq recognizes XRP as a mature and relevant asset in the digital economy. This news comes as Ripple continues to gain momentum globally. After years of legal battles in the United States, including a high-profile case with the SEC, XRP has seen renewed interest from both retail and institutional players. With regulatory clarity slowly improving, XRP is once again finding its way into mainstream financial products. Being listed on Nasdaq's settlement index is more than symbolic. It opens the door for future crypto ETFs, derivatives, or other structured products to reference XRP as a component, a development that could lead to more liquidity and wider adoption. The index calculates XRP's daily settlement price based on volume-weighted averages from trusted exchanges, filtering out unreliable data and reducing the risk of manipulation. For traders, fund managers, and analysts, this kind of pricing tool is critical in an industry still struggling with fragmented data and inconsistent pricing across platforms. Nasdaq's embrace of XRP is also a signal to regulators and market participants alike that crypto is becoming more integrated into the infrastructure of traditional finance. As the digital asset space continues to evolve, price transparency and standardized benchmarks like these will play a growing role in bridging the gap between crypto and Wall Street. Ripple, the company behind XRP, has made it clear that its long-term goal is to serve as a bridge currency for cross-border payments. This new listing reinforces that narrative, positioning XRP as a token not just for speculation, but for real financial utility. As the markets continue to mature, moves like this one hint at a future where cryptocurrencies are not just part of the financial system, they help define it. We'll be watching closely to see how this development affects XRP's adoption and market performance in the weeks to come. Stay tuned. A groundbreaking development has just hit the XRP ecosystem. PFM CRYPTO has officially launched the world's first XRP Lightning Mining package, offering users a way to earn XRP-based ecological dividends, all within just 24 hours. In an announcement that's generating buzz across the crypto space, PFM CRYPTO claims their new platform allows investors to participate in a lightning-fast mining protocol, combining speed, flexibility, and passive income. This isn't traditional mining as we know it. It's designed to leverage XRP's unique architecture to deliver daily returns through ecological staking and smart contract mechanisms. So, what exactly is this package? The XRP Lightning Mining package is a short-term, high-efficiency mining solution. Users can lock in XRP through PFM CRYPTO's system and start generating rewards within a single day. According to the team, this product taps into the broader XRP ecosystem, redistributing network value and rewards through what they call ecological dividends, a nod to how the platform supports sustainability and long-term token health. What sets it apart is the emphasis on speed and accessibility. PFM CRYPTO says its platform eliminates complex setup, hardware costs, and long lockup periods. With just a few clicks, users can activate a mining package and start earning, making it attractive for both experienced traders and newcomers looking for passive income. The launch comes at a time when XRP is gaining traction again globally, especially after its recent listing on Nasdaq's crypto price index and ongoing partnerships in international finance. PFM's new service aims to capitalize on that momentum, offering a new use case for XRP holders looking to earn yield without the complexity of trading. Of course, as with any new crypto product, caution is advised. Investors should thoroughly understand how the rewards are generated, where their assets are stored, and whether the promised returns are sustainable. Regulatory clarity around XRP is improving, but high-yield crypto schemes, no matter how innovative, should always be approached with proper due diligence. Still, this move signals an exciting evolution in how digital assets like XRP can be used. By blending staking, mining, and yield generation into a simplified, fast-access package, PFM CRYPTO could open the door to new forms of decentralized participation. As platforms continue to innovate around XRP and similar assets, we may be witnessing the early stages of a new kind of crypto finance, one that's faster, more efficient, and tailored to a global audience. We'll continue to monitor PFM CRYPTO's rollout and bring you updates on how the XRP Lightning Mining package performs in the real world. Stay tuned.